Hello, everyone. Welcome again to my YouTube channel. Today, I want to talk to you guys a little bit about the prelim title report. This will be one of the most important things that you also have to review because, again, this tells you how much information that you need to have when it comes to the property that you are going to be loaning or actually, making a decision on for the loan request that is being put out there. Now, again, remember, a mortgage is considered a collateralized or a secured loan, and the security that is used for this loan would be the property itself. So when you are reviewing this, you have to look at the title report, just like you look at the appraisal report, just like you look at the credit report, the bank statements, the loan application 1003, and all those documents with so much importance and as much care and as much time as needed, because you don't want to make any mistakes that could potentially harm the company. Again, remember, as an underwriter, like I mentioned in one of my videos in the past, that the job of an underwriter is risk management. So in order for you to understand it, you have to know how to review some of these documents to be able to mitigate risk. Again, folks, a title on a real estate property is extremely important for you to know. So today I want to share with you a few things that you will be seeing when you look at a title report and how to review these items. Okay, so the first thing would be the schedules in the prelim title report. So in the preliminary title report, they have three main schedules, and those schedules would all have information that you need to know. It's also important to know what the dates on those title reports are. So when you do take my course, there's a lot of information I mentioned. I show you how to look at the dates on the title report. I show you, we talk about something called a closing protection letter and all of those things that you have to know when you're reviewing the title reports. But today I want to do a brief synopsis of some of those things. But the most important things to understand when you're looking at a title report will be those three main schedules that are included in every preliminary title report. So the first schedule will be a Schedule A. And the Schedule A states who owns the current property or who the current property owner is. Of course, in addition to the Schedule A of the preliminary report, it meticulously details those property boundaries. For example, the legal description of the property, the location of the property, where the property is located. So, of course, it also clarifies the type of property, if it's a single family, a condominium, or a townhome. Again, these are things to know because, again, when you are reviewing a property, you want to make sure you're reviewing the right title report that matches the subject property. The second part will be a Schedule B-1. So the Schedule B-1 of the preliminary report is a list of exceptions to cover. So just without even going through this in general, the biggest thing you have to remember is that always shows you what liens that are associated with the title report. And those liens must be satisfied. So in the video, again, remember the link to my course is in the description below. So you can always click that link and it takes you directly to my course, so you can use that as a guide to help you know everything you need to know, one, to pass your underwriting exam so you can get the job, and then two, to be able to excel when you actually do get the job. So again, going back to the Schedule B-1, it's provided, it helps you list the exceptions that needs to be covered. Additionally, in order for the title company, to issue a policy to a new owner or a lender, that title report requires specific items to be cleared up and satisfied. And those items are typically liens or any kind of, it could be liens or any kind of encumbrances or things like that. Those things have to be satisfied, cleared up, or explained before the title company can issue a title policy on the property. So, for example, a preliminary report might require approval of a bankruptcy trustee, requiring other persons such as an heir or a former spouse to allow the property to actually be sold or be refinanced. So additionally, a Schedule B may ask to execute closing documents or require the release of various types of liens. So again, folks, I've had situations from an underwriter standpoint where I've had properties that had multiple liens, from mechanics liens to home equity liens to just bank liens to tax liens, all kinds of different liens that were on these properties, and those liens were not cleared up. And from an underwriter perspective, I was unable to clear these files to close and get this file the full final approval so the actual new owner can take it over. And that could cost your borrower a lot of money if you are not able to catch these things in the first place. Also, from an investor perspective, when I've actually walked on properties, I've had properties that had, multiple liens, and I didn't want to use the word horrible, but they were horrible experiences simply because when those properties had these liens on them, the first thing I noticed was I had one that I went ahead and I bought without even making sure the lien was cleared, and it affected me because I had to end up giving the property back to the owner. I lost all the money that I paid because this was a cash deal out of my pocket, and I had to pay an attorney to give this property back. I had another one that I didn't buy, which I was, intelligent enough because I'd gone through the process. But this gentleman had multiple bankruptcy claims or creditors that had liens on his property. So he had filed, I believe, a Chapter 13, and the Chapter 13, he had a very expensive house that he still lived in, and part of his agreement under Chapter 13 was the creditors had the opportunity to file a lien on his multi-million-dollar house. And whenever he sold that home, he was going to have to pay them back. So as long as he never sold it, or the property stayed in his possession, or of course, the property never got sold, he never had any concerns with paying those liens back. But the minute that we came in as investors and tried to purchase this property to do a fix and flip on it, we found out that these creditors had to be paid, and of course, that killed the deal completely. So again, these things are important for you to know. So I've given you two perspectives: one from an investor perspective, one from an underwriter's perspective, but you would be working as a mortgage underwriter, and it's important for you to know these things from these two perspectives. So when you're reviewing the file, you know the things to look out for and the things to not allow to cause you to make a decision on the file and make a premature decision that could potentially affect your employment. And then lastly will be a Schedule B-2. The B-2 defines limitations to making modifications to the land. Any deed restrictions or easements or restrictive covenants, mineral or water rights are typically defined in the Schedule B-2. Additionally, though, the Schedule B-2 will clarify whether any utility easements are also covered. So there's situations where, people have utility easements where, of course, again, remember, in order for you to know what an easement is, I would suggest that you speak with a title attorney or a title or tax attorney, because they typically know these things. But understand that easements and deed restrictions happen to be on quite a few properties in the United States, or even in potentially other countries as well, right? So I'm speaking from my perspective here in the US, where I've seen properties that have had deed restrictions or restrictive covenants or some kind of mineral or water rights that end up becoming an issue down the road. So what ends up happening is the Schedule B-2 will clarify these items. And for you as an underwriter, you have to know if it's okay for you to move forward with allowing your company that you work for, the loan company that you work for, or the lender that you are a part of, make the decision to still take on this loan, understand that there could be these potential issues or red flags in the back end. So your job is to make sure that you define this, you understand what your lender policy is in regards to these items, how to review these files, and if you need to get exceptions to any of these limitations or easements or deed restrictions, how the exception process works. All those things are covered, not just only in my video, but they're also covered when it comes to knowing how to read your lender policy, which is something that I refer to quite a bit. Again, don't forget to click the link below. It does have my description. In the description, it does have my course information. You could take advantage of the course. It's available on Udemy. It helps you learn everything you need to know. And most importantly, helps you be successful to allow yourself to land this job and to make the big bucks as a mortgage underwriter, but especially to pass your test case and to stay working as a mortgage underwriter for as long as you choose. So again, folks, I'm excited for your success. Thank you for trusting me. Thank you for giving me the chance to go ahead and help you be successful. Peace.